Good afternoon, everyone, and welcome to another episode of the TradeStylist, a place where we craft your trade. This is the episode of the second week of February, so 10 to 2024. And as usual, we start with the risk disclaimers that, first of all views are personal and that you may lose more than your invested capital in this world of trade. So we need to be extremely careful about that. So hello once again. I am Jyoti, better known as DJ. Um, Here to craft your trade. And that means teaching you about trade, making sure you make the trade the right way with the right risks. And you can find me at the rate the Trade Stylist on YouTube, Twitter, and Instagram as of now. May the trading gods be with us always. That's what our motto is. And we start by looking at the market update for the week. So, number one, we start with Robusta coffee, which was down slightly by 0.7%, while Arabica improved to 195.98. Cocoa London continues on its spiraling journey, hitting the highest ever for the current month contract for Cocoa US at 58.82, while London is at 47.28. These are 46-year-old highs, and for US, they said it's an all-time. Orange juice also positive slightly at 373.65, and cotton exceeded its range-bound formation to move on to 91.58, while sugar still stays at 23.99. In the grains, the market still bearish overall. Corn down by 2.8% to 430.25. Wheat down again by 597.75. Soybean barely there at 1184.75, and soybean meal reversed from its formation trial. It was trying to break out, but back down 2.8%. Soybean oil, on the other hand, up to 47.25, and I think we might have a trade formation going on. YTD 2024, we can pretty easily see that the soft complex doing extremely well. In fact, everything has turned positive. Grains, exactly the opposite. Everything negative, with corn now 36% down year on year. Um, Moving on, we look at the trade speak and basically what the market is talking about this. And primarily, the idea is that most of the softs complex has been driven by fund flow, where the hedge funds have been strongly active in the last 2 years at taking positive movements, while it has been exactly the opposite in terms of looking at the grains market. This is primarily driven by good trade flows coming out of Ukraine, good trade flows and planting coming out of Brazil, Argentina, and also the fact that China has been canceling trades on the US. And primarily, as we see, that the markets that we're covering are the US markets, and they have definitely taken the brunt of both these local and globalized market forces to show the impact. Uh, Next week is WASDA, so we do impact volatilities to come in, and we would be analyzing the WASDA report in the next episode of this. But till that time, I do think the market stays bearish. Yields are very, very strong for the USDA for some of the crops, and I think it's time that the USDA starts revising them slightly to more realistic levels, probably. But yeah, those are my views, and that's something that we need to still see how correct or wrong I am. Moving to Trader Peak, what are the points of interest in the coming week and what are the headlines? So, number one, Sweden has ended its investigation into the Nord Stream blasts. And oil is rising on lower than expected rise in US stock. Gold prices are range bound as rate cuts fears persist. As we knew last week, there was no rate rise and Fed held steady. Farmer protests are still continuing across Europe. And India has tightened control of agricultural commodities ahead of the election, which is a sign that global inflation again might pick up. Iran's saffron supplies are drying up, and I think that's been changed as a result of climate change. And then funds definitely are pushing corn and soybeans new loans as China cancels on US trades. Um, Moving on, we look at the upcoming economic reports this week, and that's primarily these four things: Germany economic sentiment, UK inflation year on year, US core inflation month on month, Japan GDP growth rate Q on Q. That's quarter on quarter. The way I choose these reports are basically the ones which I think have the maximum impact on the commodities that we track. And it might not necessarily be as impactful as for some other commodities, but for the commodities that we talk about, these four things would be the most crucial ones going into next week. Finally, we'll look at trade deeper, and that's this week about deep diving into GBP USD. So, what is the overview? So, first of all, the forex ticker is GBP USD. In the trade terms, we call it the cable. It shows the value of the British pound against the US dollar, and it is globally one of the most widely traded currency pairs. And as we probably know, if people are fan of the World War histories, that this was one of the most significant currencies, and the dollar hegemony, as we call it, used to be the pound hegemony at one point in time. Let's look at what this has been doing in realistic terms and see how we can sort of track the GBP USD over the last 3 months. So, if we look at the graph of the movement over from October till date, currently the rate is around 1.262. That is, I think, the closing rate yesterday. Uh, However, the GBP has suddenly had an uptrend reversal, um, which means it closed above the 200-day moving average at 1.256. Um, and there are immediate resistance levels at 1.265 and 1.268, which are the Fibonacci and the 20-day SMA. But physiologically, I think a 200-day SMA is at 1.27, and that's, I think, a critical figure to look at. On the downside, on the other hand, I mean, support levels are obviously at 1.26. It's a static support, psychological support. And then 200-day SMA comes out at 1.2560, which is what I said it had crossed an upward side. Below 1.2530, there's a Fibonacci level of 1.254, which may not be that significant on the chart, but 1.25 then becomes a more psychological and static support, pardon my wording. Um, Going ahead, what are our forecasts? Short term basis, I do expect this to be around 1.2547. This is end of Q1. This is my modeling number. So that's where I expect the GBP USD to end up. This is March numbers, market sentiment, economic data, and basically geopolitical events. Longer term, slightly. 1 year ahead, I do think the British pound loses value. I'm definitely looking at a 1.22263. And the factors again are global macro models and sort of accumulation of analysis or analyst expectations in my industry. That gives me these numbers. Looking at these forecasts, how do we sort of come to this? Well, number one are the interest rates and central bank policies, which is Bank of England and Federal Reserve significantly influence the GBP USD. Then economic data releases. This is again when we look at indicators such as GDP growth, inflation, retail sales, and employment. Uh, these definitely impact, and those reports, as you would see, week on week, I typically focus on the UK market quite a bit. Uh, then again, the next is the Brexit developments, which we have all seen how critical they are in terms of UK's exit from the European Union and the impact that it had on the pound. Then the geopolitical events and risk sentiment, which is political stability, uh, the policies of the government. Uh, GBP, in fact, used to be a safe haven at one point of time against the USD. It has lost that relevance today. And I think that's where most of the market now is getting impacted. And finally, correlation with other assets, which means the GBP USD most often correlates with oil, typically, and even the equity markets. So these are again some things that we need to watch. Finally, tradecraft. What are we looking at for the next week? Well, interestingly enough, we have two trades. Number one, there's a soybean oil setup. So please buy soybean oil on a break of 48.65, in my opinion, with a target of 53.59, and of course, a stop loss of 44.5. And on the other hand, the same sugar trade setup, I'm still thinking that there's a base formation going on. So if it breaks upwards, buy on a break of 24.60 on the upside, stop loss at 22.69, and a take profit on 27.66. Both of these are above a 1:1 risk reward ratio, so strongly positive. And I think let's see if any of these trade setups execute in the coming week. Soybean oil looks to be close to my setup range, and so does sugar. So hopefully we get triggered, and then we both make some money. And finally, for next week, how are you looking at? Well, we go on towards controversy, the next episode, again, risk management, part two, and then again, some more of trade crafting. Idea is that we keep trading. If we don't play in the trading markets, we don't make money, and we are not active. But at the same time, as I say, it's not about trading every week. It's not about trading every time. It's about making sure that the setup and the risk parameters meets our requirements and then taking the trade. Hopefully, you liked this episode once again. We're coming to you from all of these nations. Um, wish that I've added some value once again to your weekend and I've helped you learn some more. The next episode goes out next Saturday on the 17th of February 2024. Next time, hopefully, we'll be coming to you from Montenegro. Uh, and see you there. Thank you so much. I wish you well.